Hello, everybody, and welcome to the Middle Class Investor. Thanks for listening. Today is the 11th of November. It's about 5 o'clock on Saturday. About to watch Texas A&M football game here in a little while, and thought I'd squeeze in a video and talk a little bit about the financial markets this week. Well, this week, we talked last week and the week before, I think, about how we're coming up to this top. Well, it's not even on this page here, but we had this really short-term channel drawn here, and we were exceeding it. And then we had this. I guess I have to back out a little bit. We had this channel right here that was kind of an intermediate term channel, and then we had the longer term channel here in green. Something about when I zoom in, it goes away. So let me just see if I can. There we go. Let me see if I can zoom in like this. So we had this kind of convergence right in here of all these channels, and then of course this little red one here. It's hard to see. I know. I apologize, but it's marked by this line and this line right here. You can see that we started to close down below this channel, so it's starting to see some cracks or some chinks in the armor, as they say. Anyway, last week I had identified this little area right here as a convergence, and I think it's still valid. It's still a valid place on the chart. Certainly, if you right now, this is a monthly chart. Probably what I need to do is be on a weekly. So you can see for the week we were down. We had a big range, and closed kind of in the middle of below last week's high, but not below the low price of last week. Yeah, so in the middle of this range here, and but it was pretty hard sell-off. So it's possible, and we'd have to zoom in even further to like a daily chart or even a maybe an intraday chart, like an hourly chart. And this could very well be, the first move down. I mean, we broke out of this red channel, and then we've got a rally coming back up to retest it. The one thing that makes me a little unsure about this, and you can even see it on a daily chart. So if I go to a 3-month chart, you can see here that we have a gap. I'm gonna zoom way in on this so we can study on it for a second. So you can see that this is on a daily chart. So you can see that the market. Let me double check something here. Let me make sure I'm on the right. Yeah, I'm on the SPX daily. Yeah. Okay. So see, well, it's not really showing a gap here, is it? That's interesting. So technically, there's not a gap. There's a gap between open and close, but the range extended down into this range. So there's not a well, depending on how you define gap, this could be a gap or maybe not. You can definitely see it on a on like an hourly chart. So if I zoom in here, you can definitely see it on an hourly chart. So let me tell you my concern. So this was a pretty violent sell-off, and could be the first move down of a much larger degree move down. But it's unusual for the market to make a gap like this and not come back up and fill it. So that's the one caveat about this particular move. But we should know early next week whether or not this move is significant or not. And I think it could probably move. Let's assume for a second that we're going to sell off in this move. Well, we might move a little higher, because see, this is the AB. Whoops, I'm having a lot of trouble here today on this I don't know why there. Okay, let's see if this works now. So you've got kind of the A move, kind of a B, and then what we're expecting is probably like a C move to just eclipse this high here. If it's going to go lower next week, this is entirely possible, and then we could see a pretty abrupt sell-off, start breaking these other channels as the degrees of trend get larger and larger. But let's go back out. Let's go back out. Let's just look at a weekly, because right now on a weekly basis we're not in any danger of breaking this trend. But if it comes down through this red channel and maybe to the bottom of the blue channel and then bounces a little bit and then comes down again, I mean this trend could end up being broken pretty quickly. So I just want to I'm just cautioning. I'm just throwing a big yellow sign out there. The market's still within, its 50-day moving average and all that kind of stuff, but there's a lot of cracks, a lot of chinks in the armor. The bond market, which we're going to go look at in a second. Before we do that, I just want to look at volatility. And you can see now we're starting to get down into that apex, which I never thought we would get that far down into there, but some of that's just where you draw the line. But you can see we poked out a little bit last week, and my guess is this is gonna jump out pretty rapidly. Let's look at the 10-year. The 10-year appears to be following along the plan we've been talking about here, which is that a low was made in 2016. This move up was first move off the low, and all this has been retraced. We had this blue box drawn on there. It kind of went in, came out, went in, came out, went in. We talked about all these different. This was the midpoint of or actually this one down here was the midpoint of a large white candle that was over here. We talked about it was possible for it to come down into this area, and of course it just never did. So it broke out of this downtrend line. It's kind of working its way back, maybe finished, maybe not, but certainly the next move is up and away, and probably north of 4% before really you start hearing too much, so before the average person starts hearing about it. So interesting here. Here's a gap. See, this gap was filled right here, so that's pretty typical. Again, which kind of makes me nervous. Let's look at the Dow real quick and see if it had a gap, because sometimes let's look on a daily basis. That's really the key one here. 3 month. So yeah, you can see it. I mean, there's not a gap there. It's actually this low overlaps this high. So technically, there's not a gap. Even though the market gapped down, obviously from here all the way to here. This is the open right here. Ran all the way down, ran all the way back up, and then closed right here. So clearly that is a gap, but not it's not a gap in the range. So maybe we don't have to worry about that. Maybe that's not a concern that we need to be concerned about. So let me pull back up my so let's look at the short-term rates. We looked at the long-term rates. Let's look at the short-term rate. Let me go to a 5-year weekly. My internet's, oh, there we go. Okay, so you can see here, remember we started talking about a long time ago, if we broke this line, then the Fed was going to start raising rates, and sure enough, it broke the line here, and the Fed started raising rates in here. So now look what's happened. We've pulled back, and we're taking off. So yields, as mentioned here, short-term yields are taking off. So you're going to see the Fed resume their rate-raising campaign. And they're going to be criticized for this a lot, because the economy, this is all going to happen about the same time the economy rolls over, and people are going to start questioning the Fed and the wisdom in their actions. So, all right, let's look real quick at a couple other ones here. We'll look at, yeah, we can look at these other countries. Let's look at Germany. We used to do this a lot. Remember, we looked at the different countries. You see, Germany now is firmly in our resistance area and had a big reversal there. Look at that. I mean, you had, let's look at this real quick because this is kind of interesting. This is a weekly chart. So you can see here that Germany kind of consolidated here a little bit and then broke out, but then immediately sold off. That's usually not bullish. So looks like maybe all the markets are going to start experiencing some trouble right here at the end. This is kind of a bearish looking symbol here. Sorry about that. This is kind of a shooting star pattern. So next week on the Nikkei, if you get something that looks like that and closes down below here, then that's a confirmed shooting star, and shooting stars are it's just a special type of doji that shows kind of a topping action in the market. Let's look at the UK. The UK never did make a high. Remember, we had this box up here. We talked about how it wasn't likely to make a new high, and this trend line has been serving as resistance. We've had this on here for a long time. In fact, let's just see how long we've had it on here. Take the extension off. So I've had this trend line on here all the way since June. Was that June of this year, June of 2017? So all I'm doing here is I'm just turning on the extend button, and isn't that interesting how that still serves as resistance? So you could have a situation where the UK is rolling over here, and if it breaks this trend line down here, then it's probably going to start going quite a bit lower. But definitely this trend line, we're going to leave this on the chart because the market seems to respect that line. Let's look at I guess that's all we want to look at on that. Let's switch over to the TOS charts. Here's the SPX, and we'll zoom in on this one just to make it a little easier to see. But you can see here this trend line. So this is an Elliott wave. I'll explain it after I zoom out, but you can see here the trend line. See how the market action has actually gone over the trend line, and now looks like it wants to reverse. So if we get something like this, then this is likely done, okay? And we're going to start working our way down, probably into this area right here off the previous fourth wave low. Near term, it'd probably be right into this area. Should be a pretty sharp move down there, and it might not even stop there because that's just this small degree wave low. Let's zoom out, and I want to show you this this rule on the trend. So what Elliott wave says is this is a 1, and this is what's called a flat, an A, B, C, 2. So you start at wave 2, you extend it to wave 4, and then you extend the channel to the wave 3 high. The wave 3 price action here. And what you get, actually, I extended a little bit too far, really. Really what you should do is, let's just do it real quick. I said wave 3 high, and that's what whoops, that's the wrong tool. Sorry about that. Let's see, let's try this one. There we go. So here's the wave 2 bottom. There's the wave 4 bottom. We'll click right there and extend to the high, which is right, I think the high is right about there, right in there. So now you can see that there's quite a bit of throw over on this chart, and the way the throw over, the way it resolves itself is all this price action over this trend line is throw over. But once the market starts trading back into, so let's say, well, here, let's say Monday we get something like this, and then Tuesday we get something like this, and then Wednesday we get something like this. Okay, now that's officially a throwover now that you get 2 bars in a row inside the channel, and that usually will mark the top. Okay, so look for that to happen. The other thing that was interesting that ended up not playing out, it played out on the futures market on the ES, but not in the cash market. And that's this ending diagonal. And I want to show you that because it's really interesting. I'm going to go to, I think it's interesting. We're going to go to a daily chart and I'm going to zoom in on, let's see, I'm pretty much zoomed in where I need to be. Okay, so here's where it starts. Here's where the trend started. So the way an ending diagonal works is this would be ABC1, ABC2, ABC3, 4, and 5. And the way you draw that is you go to the bottom of, gosh, I'm having a hard time seeing this all of a sudden. You would go like right in here and draw a line across the top here, whoops, to this high. And then you would take a line from here, this low here, and draw it up across the lows there. And you can see this converging action here. Actually, this is not drawn correctly. Sorry, I still have my tickle. This thing's been around forever. Actually, right there. So you can kind of see the ABC1, ABC2, ABC3. 3 went outside the channel. Although maybe not that much. Right about there. So you can see even on this ending diagonal. Now the interesting thing is, oh, I have to show you the overnight action. Let's go settings. I'm sorry, I'm doing all this stuff. I'm gonna highlight the extended hours. So why didn't that work? That's interesting. Style, settings, futures. Not sure why that's not working. Huh. Well, this thing, I've got it all screwed up now. All right, let's just try time axis. Price axis, no. Huh, futures. Apply. Okay, there, I had to hit apply. Good grief. Okay, so now I forgot where I am. Let's see, let's go back to a day chart. All right, so here we are on this. This is our ending diagonal, ABC1, ABC2, ABC3, and then this is 4, and then 5. Okay, so see, even on the ending diagonal, we have this throwover action. So the difference, though, how come I lost my extended hours again? You ever have those days where you just feel like you should just start over? Maybe it's because I can't. Let's look at a 4-hour. Yeah, there we go. Okay, so here's our ending diagonal all right here. So let's zoom in. So the point of doing all this is to show you that the ending diagonal finished on the ES, but when you look at the SPX, I don't have it drawn here, but if you were to draw this out and show this, what you'll find is, see, this was the high here, not on the ES. We made another new high. So again, I don't know what the implication of that is either. So not sure what to tell you about that, but I don't want to highlight those anymore. It just makes it hard to see. It's just more stuff on the chart. Well, I'll just mess with it later. Sorry about that. All right, so let's look at gold and some of these other things. A lot of lines on the chart for gold too, but you can see, okay, here's the big bull market run up into 2011, and then gold, this likely a wave A pullback, and B should be some 50% of this pullback here. So really, we should be seeing gold before B is over. We should see gold around 1500. Now, we've talked about this though. What's gold likely to do? Is it likely to go straight into this area and then bounce? And it looks like the answer is no. So we finally got our answer on that. Clearly, gold has reached a peak here, and it is selling off, and so it could sell off all the way down into this area right in here before it bounces, up in here to complete wave B. So this could be, kind of an A, B, C, all the way back, down to here, and then C. Okay, so and at the time, I think I said that was more likely because it just didn't look like there was enough time here. The time difference between here and here is not proportional when you look at how much time it took to do this. This move should be almost as long as this move, maybe 2/3 or a half. Even a half would be adequate, but you can see this is maybe a third of this whole move down. So likely what's going to happen is we're going to see gold pull back into this area first. Let's take this off there. That's confusing. Likely to pull back into this area first and then rally up into near this 50% area. We could just make this box a little bit bigger. Something like that's a big area, but we should see gold come down into this area and then rally up into this area. Okay, and maybe as high as 1485, 1490, something like that, and then boom down. Okay, that's what I see with gold. Again, when we were up here, we were right in the middle, and it was like, golly, is it going to go up? Is it going to go down? There's just no way to know. So silver, I would say silver's likely to do the same thing, although it may not pull down as far before it rallies. And you can see silver's hardly moved at all. So, I mean, we should see silver moving way up into this area, at least above this 27 area for 38% retracement, and we haven't seen that yet. So keep an eye on that. Oil, talking a lot about oil today, actually, with some trader buds of mine. It looks like to me oil wants to wind its way up into this resistance area. It's kind of you can kind of draw a little pivot off of this high right here, in which case it may pull back a little bit and then kind of finish its way up. But there's more return to the downside for oil than there is to the upside. I mean, the upside, it may pull down a little bit and then rally, but there's not a whole lot of upside to oil right now, in my opinion. I want to show you the British pound because we've been talking about that. Is that the largest? Yeah, that's the largest. That doesn't seem like 20 years. Let's try. Oh, because I'm hitting. All right, well. The British pound, we made a pretty important low here, rallied, pulled back, made a higher low. I was kind of hoping, we'd get some pullback again in the British pound, but you can see here it really took off right in here. and maybe we won't get a pullback. I mean, that's possible we don't get a pullback, but sure would like to see the British pound maybe somewhere in this 139 area before I buy it. And I think I was showing you that you could buy the British pound on the FXB. This is the FXB. So we were kind of waiting, trying to see if it'd pull back to this trend line here. Hasn't done that yet, so keep our eyes and ears open on that. I want to look at the euro. Euro, I think, is pretty good short opportunity in the euro. I think I want to see a little bit of a bounce. I mean, we might get it, we might not, but I'd like to see a bounce of the euro back into, you know, this one, maybe not quite that high, but maybe this 1.17 area, a little bit higher, and then get short the euro, and maybe hopefully hold the euro all the way back down into this 104 area. So I think there's a lot of opportunity in the euro short. British pound long, although after a pullback. So that's kind of what I'm looking at right now. Let's go back to profit charts, and let's look one more time at let's look at the 10-year yield, because again, we talked about this in here, but I just want to go over it again. Well, hold on. Let's look at the S&P 500. Okay. So what moves the market? Now, this is a very rudimentary explanation, but basically what you had going on here, let's back up a little further. If I can. Internet's really slow these days. Okay, so back in here, we had this was the financial crisis, the sell-off. And right in here, you know, the Fed, the rates were already low. They were like 4% or something back when we had the financial crisis. But as all this started to happen, the Fed cut rates, short-term overnight lending rate, to like 0.5. And of course, the bond market followed. I mean, it really rallied and caused yields to go down. Now, what happened here? The Fed then started all these QE programs. What's QE? Well, they were buying mortgage-backed securities and all kinds of bonds and things like that. What does that do? Well, that expands credit. So the equity market, the part that you and I invest in, is very, very sensitive to credit. Okay. And what you got going on right now is you've got, as you can see, if I let me see if I can put both these charts together. Let's see if I can do comparison chart. I'm going to put in the J and K, okay, the junk bond chart. Okay, so here's your, of course it doesn't go back as far, but this black line is the S&P 500, okay? And this blue line is high yield or junk bond price, okay? And you can basically, as the high yield goes up, credit is expanding. Now right in here you start to see, notice how this sell-off in the S&P 500 corresponded with this sell-off, okay? Now notice how the equity market has been going straight up since then, right? But the high yield market has not been going up as quickly. Let me zoom in a little bit on this. So let's just look at it from here. So you can see here that the high yield market, they started off kind of at the same low, right? But as they've gone up, see what's happening? The yield market is starting to roll over, and the S&P 500 was still going up. So this is a real problem for the market, and when you see this happen, it's usually not a good sign. It's usually, and it's just so happening. It's just so happened to happen at the time we're at the end of 5 waves. Now that's no coincidence. That stuff happens together all the time. But this is a little bit of what's called an intermarket divergence. You're starting to see the yield market diverge, the credit market diverge away from the equity market, and this is not good. Okay, not good at all. So anyway, that's what we were talking about today with my trader buddies. Is start to look at high yield as it compares to equities, and you're going to start to see this divergence, and that's usually not good. So, all right, everybody, that is it for this week. I'm just rambling, and I had all kinds of technical issues today, phone ringing, stuff like that. I apologize, but man, be nimble next week. It's going to be tricky. I have a feeling, and it's going to catch a lot of people on the wrong side of things. We got earnings out next week. There's earnings from like let's see. I think there's a lot of retail earnings out next week, like Walmart. Let's see who's out next week. How do I do next week? Now let's go to month. And next week is going to be this. So we've got, looks like none on Monday. Oh yeah, here we go. It's weird. It's like their calendar's not. Well, just trust me when I tell you there's a bunch of earnings here. Maybe I got to click the right thing over here. Let's see, earnings. I don't know what WUBA is. So symbols. Let's see, Acer. God, there's quite a few earnings next week. Let's pull this up. There's so many symbols now in the market, but I mean, you can see there's all these stock symbols. These are all earnings next week. And, Walmart, Target, QRST, somewhere here, TGT is in here somewhere, Walmart is in here somewhere. So just be careful next week. Let's see, Walmart I think is on Thursday. Let's look at that. Yeah, see there's Walmart on Thursday. It's Target. So retail's been pretty soft. I mean, look at all the earnings. Let's look at Monday. Look at all those symbols. All those companies are going to report. Tuesday, all these companies are going to report. All of them. Wednesday, all these companies are going to report. So we got a lot of earnings next week. And and we're in the market's also at this kind of precarious place. So just be careful. We've got to be getting close to the end here. The markets have touched the top of their channels on these arithmetic scales, and we're just likely to see delete all, close. Now that we've exceeded the channel, we're likely to see at least some sort of pullback. Okay, if not the top, some sort of pullback that could end up taking a lot of money from you. So be careful, be nimble, and just watch out for your money. It's your money. Nobody cares about your money like you do. Okay, take care, everybody. See ya.